Hi, my name is Rick Sorrentino. I'm a senior account executive with Golden Financial Services. Been with them for a little over 7 years, but I have over 30 years experience in the financial industry. Today I want to talk to you about debt and consolidation loans. Banks, financial institutions, they'll call it credit. I call it what really is debt. I mean, if you're not using credit to make money, then it's nothing but debt. I mean, think of yourself as what if you were a business, okay? And you were running on credit. If you're not making money using that credit, how long would that business stay in business? How long could you stay afloat? Same thing with your personal life. I mean, look, the banks, the financial institutions, they want you to always be comfortably in debt. That's what makes them the most money. I want to talk to you like family. I want to help you. I mean, look, people are living longer these days. They need to be more financially independent and less reliant upon credit, because in the future you're not going to have as much money as you have right now. Your earning capacity changes. You're trying to set yourself up more for your future, and the more you use debt now, again, if you're not using it to make money, you're using debt. If you're using credit to make money, great, fine, do it right. That's what you're supposed to be doing. But if that's not the case, as I said, all you're doing is digging a deeper hole. Yeah, it might be a little bit more comfortable if you've got $20,000 of credit card debt and your minimum payment is $500, which is what the equation pretty much comes out to. You might be looking to say, let me get a consolidation loan. That'll make things easier. Well, let's look at the figures. On a 5-year consolidation loan, if you have good credit, you might get an 11% interest rate, and the payment would be about $430. So that's $70 less than what you're currently paying right now. Is that enough of relief for you to put money in the bank so that if you do come across another emergency, a situation, that you wouldn't have to turn to credit? I don't think so. I mean, you're in a 5-year plan. And if you need a longer term than that, well then your payment might be lower, but you're still, the odds of you having an issue where you're going to have to turn back on credit because you're not becoming self-reliant, it just keeps that, it's a perpetual cycle. And that's what the banks and the financial institutions, that's what they want. They always want to keep you comfortably in debt. Like I said, I want to talk to you like family. I want to give you the same advice I would give a family member. And that's if you cannot get comfortably out of debt in 5 years, but actually struggle and do it in 3. Your goal is to get out of debt in 3 years. That's with struggling. You're living tight. You're doing what you got to do to get out of debt as quickly as possible. Because look, as long as you're in debt, you're losing money. And the more money you lose today is that much less you're going to have in your future. You want to be putting money away and letting it build and grow instead of spending and it costing you more. But using a consolidation loan, it's not putting you in a position where you could save at least $200 per month. There really aren't much better options for you out there. And I'd like to discuss them with you. As I said, my goal, I want to put you in a better position. That's what works for you, for me, not the banks, not the financial institutions. Their goal is to keep you in debt. That's what makes them money. They want to keep you comfortably in debt. They just want to keep you barely alive, just sustained, and just keep it that way. And it becomes, that, like I said, that perpetual cycle. But where is that going to lead you later on in life? That's what you need to think about. It might make things comfortable today, but you need to think about tomorrow. Give us a call. We've got some real good options. I'm sure a 5-minute, 15-minute conversation would work well for you.